Yo, 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 what is up, guys? Welcome back. What a week we had, huh? Volatility has entered the chat. So, welcome back, guys, to another episode of Thompson 2 Cents. I am the host, Larry Thompson, resident CMT for this channel. And today we're going to be going over hidden stocks fueling the AI boom, right? So, we've heard about, the tech plays in this area. We've heard about some other names, right? We've heard about the software plays and all that, but I want to focus on a different area of the market. But before I get to that, I kind of want to review this week and just highlight some volatility I was seeing. I wrote a note Tuesday talking about getting cute, and it actually paid off. So kind of want to walk you guys through how I put on some hedges earlier in the week, right? That work is out there, so I'm not just making this up, and how I did that process and how breadth and market internals led me to that decision. Because underneath the surface, price action tells us a story, right? The market tells us a story. And it's our job, one, to listen to the market, and then two, react to that information. So like I do every week, guys, we're just going to start with a general overview of the market here. This is S&P 500 with the past 3 cycles highlighted, right? So we had the 2020 V recovery. We had the slow bottoming process in 2023. And then we have our most recent V-shaped recovery, right? And so during this recovery, this is one of those first down weeks that we've seen, right? Today was one of the first 1% moves we've seen in like 30 plus days in the market. And that volatility is creeping back in. But what this chart does is it just zooms out, right? When in doubt, zoom out. After a volatile day, zoom out and just understand the underlying trend in the market. And understand that volatility is a feature sometimes when we've had silent periods, right? Volatility contracts, then it can expand, right? It has this mean reversion tendency, whereas the market tends to trend over time. So the thing I just want to highlight here, and some work I'm going to be doing this weekend, is around this 2021 recovery, 2020 recovery, right? Then that 2021 strong uptrend. But what's interesting about this chart, guys, is that it was actually August that started a four-week pullback in the market during that V-shaped recovery. And so what are we entering today? We're entering August. And so we know volatility tends to pick up in August. There's some seasonality work out there. Shout out to Jeff Hirsch at Almanac, Stock Almanac, right? That volatility tends to increase after we have those summer doldrums. Volatility tends to expand. So this is just something we want to look for. And then I'll highlight a little bit later some of those levels. But just zooming out, still in a strong uptrend. No reason to panic here. But let's kind of dig in. So like I said, on Tuesday, if you guys aren't subscribed, make sure you guys subscribe to Thompson's 2 Cents. We'll put the link below. I write every Tuesday, Thursday, and then I go live Fridays. And then Sunday, I send out my Sunday stock list, which is basically all the charts I'm watching heading into the week. So as I mentioned, market internals tend to lead the market a lot of times, and they also give clues to what's occurring underneath the surface. So here what we have is in the top panel, we have the S&P 500 percent above the 20-day moving average, and then we have price in the bottom panel, right? So we're looking for confirmation, divergences, those types of things. And what I noted on Tuesday here is that the percent above a 20-day moving average, we're not confirming price, which that in and of itself is not a reason to, not a signal to the market, right? That's not a reason to get bearish the market. It's a reason to pay attention, right? Like a yellow, blinking yellow light, right? You slow down, you put your hands on the wheel, you don't just stop. You pay attention. When we saw this, I was curious, like, we're starting to see this divergence. The Mag 7 started to report, okay, I'm going to pay attention, right? And then what did we end up seeing in tandem with this is we saw volatility contracted, right? So let's do this really quick. What we saw, this is from my friend Don Investing, follow him on Twitter, right? So what we saw here is that if you're looking at the daily VIX index, which is representative of volatility, right, we saw a huge contraction. You can see it down here in this bottom panel. We saw a contraction in the VIX. So we saw internals, right, weakening, short term, right, we're talking short term, and we saw volatility very contracted entering August, which we already highlighted, tends to lead to volatility. And you can see that seasonality panel right here, right? August tends to be one of the most volatile months on record for the VIX, one of the best months on record for the VIX. So we partner those two things together, and you have opportunity to not necessarily short the market, but get long volatility, because we know long volatility tends to expand, right? Volatility tends to expand. So look back at this chart. We saw that breakdown. Look at this, right? We saw the breakdown, that breadth breakdown led to price contracting, right? We saw breadth pull back those 3 days, right? So yes, you could have gotten short the market potentially, but it's hard to get back in these V recoveries, right? It's sometimes hard to get back in. And that's what I want to highlight is it's easy to say I got out, but what would happen if the market rallies on Monday? Sometimes it's hard to get back in. So the vehicle to execute this trade was to go long volatility. Okay, so we're looking at the VIX here, and you can see in this bottom panel, today was 21% move in the VIX. So by going long volatility, you had a 21% move today. You had an 8% move yesterday, roughly a 30% move in the past couple of days in VIX. And that allowed you to hedge your portfolio because VIX was cheap and we were playing those probabilities. So it's not that I'm some genius that predicted this breakdown in the market. It's just that I was paying attention to seasonality. I was paying attention to the volatility contraction, and I was paying attention to price to then be the signal to add to the VIX. So what do we do now, right? Well, we highlight levels in advance of this move. As you can see here, this chart looks messy, right? So this is one of those charts where someone might take a screenshot of this and be like, LOL, technical analysis, and let them do it. The point here is to highlight, and you see it on this chart, is the risk management levels that you want to be paying attention to during a pullback, because you want to highlight them in advance, because you want to be prepared. You don't want to scramble, right? You want to react. And so what we see here is we have this 610 level, which is about 2% lower, and that corresponds with the 50-day. There's no magic behind the 50-day, right? It's just a smoothing mechanism for trend, and it just so happens to correspond with this 610 level. So that's a level I would be looking for the market to find support. If it finds support before this, right, that tells you that buyers really stepped in and it's a really strong market. So maybe you sell some of that volatility you took in. But 610 would be that next level I'm looking for on the market to kind of see how it responds. And that's about 2% lower. We break that, that's when things start to get a little more dicey, because then we're looking at the 200-day moving average and we're looking at that 580 level. And so, like I said, you highlight these levels on the way up, so you have them on the way down, because there'll be common areas of interest on the way back up. You can kind of see it here. When we got down to this 520 level, right, add a little exposure on the way back up. 540, add a little exposure. We got back above 560 and the 50-day, add a little exposure. We get above 580, maybe it's a green light to get long the market fully. And then you're not sitting out of this V-shaped recovery. You're understanding that price is repairing itself underneath the surface. Right, as right now, it's getting punched in the face. So that's what I just wanted to start by highlighting, is some of that volatility indicators show that breadth underneath the surface was leading us to kind of some of these decisions in the market, and how that can really help you be prepared for a pullback. And sometimes you end up getting cute, and sometimes it works, but been sitting in vol for a couple weeks, so it's contracted a lot, but now we're able to see it worked out for us. Once again, that VIX chart is just off the charts. So that's what I wanted to start with. The next thing I want to move into is I want to ask you guys this question. What is the best performing sector in the S&P 500 over the past 18 months? And then I want to ask you, okay, answer that question. Does anyone know? All right, I'll give you the answer. Shout out to JC at Trend Labs, JC Peretz. He pulled this chart the other day, and it's something I've been looking at, and so I just piggyback the chart, and I have my own charts to get into. But utilities. Utilities is the best performing sector in the S&P 500 over the past 18 months. And so when you see something like this, it's like, oh, well, I don't want to chase. So what we want to do is we want to dig underneath the surface and understand what's occurring in the utility space. And it's the AI boom. You're hearing about people listening to the earnings calls of Meta and of Apple and of Google and talking about their CapEx spend. CapEx spend is money being spent, right? That they're hoping that turns into earnings. What are they spending it on? They're spending it on infrastructure, data centers, right? To build out the grid and energy need that they have. And so an area like utilities outperforming the market here, outperforming the NASDAQ by 10%, and actually it was green today, right? Green week for utilities, which I'll highlight in a minute. You're seeing something that is a fundamental shift along with the fact that we have trend support to our back, right? So let's just look and zoom out here on the utilities chart, right? This is a weekly chart for about the past 3 years of utilities. You see, right, a really nice base that's being built in 2025 and is about to break out. You also see in the top panel that the RSI is staying above 40 and it's approaching this 70 level on a weekly chart. That is a sign of strength from utilities underneath the surface and not something you hear about. Well, why? Utilities make up less than 5% of the S&P 500, right? To put that in context, one stock, Nvidia, Google, Meta, those individual stocks make up more percentage of the S&P 500 than this entire sector. So it's one, you're going to be underexposed if you're allocated to S&P 500. So naturally, people aren't paying attention to it. Two, it's a boring space that typically people don't associate with growth. And it's actually growing because these companies, right, those Mag 7s are spending money, right? So if you pull the strings of the second derivative of what AI spend looks like, utility companies are there to benefit. And there's a lot of reasons why. I don't need to get into them, right? We'll let Price do that analysis because Price is the best fundamental analyst there is. Price understands what's occurring because Price has the opinions of smart people, dumb people, and then most importantly, people who are putting their money to work, because that's what matters, right? You can be bullish something and not be putting your money to work, but people are bullish utilities and putting their money to work that are studying it. The other thing I want to highlight here on this chart is look at the relative trend, right? You've seen since this April, right, since this 2024 low, right, we've made higher lows, right? We're building out this relative strength here. We have absolute price strength, we have momentum on our side, and we have relative strength. This is a 40-week SMA, similar to a 200-day. Not that important for this chart, but it's just highlighting there is strength in utilities, right? And then you couple that with the fact that in general, it's considered a defensive sector, right? It's associated with yields because they tend to offer yields. They tend to be capital intensive. And what did you see yields do today? You saw yields kind of correct today. So if they have correcting yields, they have mid-digit growth in earnings, right? It's one of the areas of the market that's expected to actually grow EPS in this quarter, right? That is a combination for strength. And then how do we validate this? Via price, right? So what I like to do with something when I see a sector that looks good on the surface is then I want to look at breadth, because if you have really strong breadth, that tells you that it's a secular trend, that there's something occurring underneath the surface, not just one stock leading. It's not a fundamental story of a company. It's a secular shift that's a trend, right? And then what do we know about the market? Trends tend to stay in place. And when we have broad participation, that just is confirmation of that underlying trend. So top panel here is just the price action, right? Daily line chart. That's not that important for this exercise. But what we have here is percent above the 20-day EMA, right? So shorter term trend, percent above the 50-day EMA, and then percent above the 200-day EMA for utilities. What do you see? 90% of utility companies are above their 20-day EMA. 87% of XLU components are above their 50-day EMA. 90% of XLU components are above their 200-day moving average. To me, that highlights, okay, there's strength in the market. We're seeing this fundamental shift. We have breadth supporting, and we have these catalyst tailwinds of maybe lower yields or maybe defensive posturing because of that spike in volatility we've seen, right? Because utilities also tend to outperform when people get defensive. So you have a defensive sector that has secular growth supporting it and breadth supporting it. This is a sector I love to see, and no one owns it, right? 5% of the S&P 500. So every dollar you put into the S&P 500, you think you're buying diversification, you're buying a nickel worth of exposure to utilities. So What I'm going to do now is highlight some of those individual names that I like in the utility space. I see this as a sector that's going to continue to outperform. I think it's a buy the dip type of sector because we have such strong underlying strength in the market. 90% above their 200-day. What do people tell you, right? Buy dips and underlying uptrends. And that's what this is highlighting, is that it's a strong underlying uptrend, right? Short term might be a little extended, but then look for those dips to be buying opportunities. So a chart like this, pulling back to 80, right? That could potentially set up that buying opportunity for you. All right, let's get into the charts. So I'm going to pop over here. I'm going to have my guy Gene do some quick magic work, and then we'll go ahead and get started. So I'm going to go through every single component of XLU right here and just highlight with you guys kind of how I see the charts and just show you guys how I kind of edit my charts in general, because I think that's something people are curious about. So it's some feedback I've gotten. So right here, we're looking at XL Energy, right? This gold line here is going to be the same on every chart. It's just the 200-day, which we know 90% of the components are above it. But we're going to see here is a lot of structural uptrends that are just breaking out, right? What I love about this name is that they just reported earnings, and we have that monkey off our back now. We have those earnings out of the way, right? Holding above this 72, 73 price level. And you have this nice base, right? This base breakout type setting up, right? We'll make one more edit here. Big storm where I live, right? Big storm happening. I don't know if you guys can hear the thunder in the background, right? So Excel Energy, beautiful looking chart here. You have this base breakout, right? Any retreat down here, I think, is a buying opportunity in something like this. Let's look at the next name that's on my list, ETR. Similar setup here, right? You have this base, right? You control it however you want. You have consolidation, you have contraction that's occurring here, right? And then you have price breaking out above it, right? People were accumulating, right? Demand was accumulating. You have earnings behind us, and something like ETR, Energy Corp, conventional electricity, above 87. I like this. I love this tight consolidation after an earnings report. All right, let me zoom in here so you guys can see. See this tight consolidation. All right, I'll even go a shorter time frame just to show, right? So had the earnings, and then it's just been drifting sideways here. All right, that's a gap up, right? And now it's holding that level. So it's a name you might see movement in. These don't look like utility stocks to me, guys. They look beautiful. Let's look at another name here, EVRG. All right, conventional electricity also. Zoom out. Another good looking base here, right? You guys can see it. You have this base, right? Breaking out above support, above that 200-day. What do we also see on this chart? We see RSI staying above 50, right? So even during these pullbacks that it's had, even during this choppy price action, right? People get caught up in this. What was momentum doing, right? Momentum was staying in the court of the bulls in these types of names. EVRG, another name, looks great, right? They report earnings this upcoming week, so it's something to pay attention to, the 7th to be exact. But beautiful little base here forming in EVRG. Another one, Southern, SO, another name in this space, right? SO, conventional electricity, right? You have this base here. And you have the breakout. Earnings are behind us, right? So a sector of the market that we know in general has defensive tilt to it, that is showing relative strength, has secular growth and breadth supporting it, and nobody owns it. What more could you ask for, right? So that's what I like to see in these types of names. So I'll go through a few more, but you guys kind of see, this is what I recommend. This is the weekend homework. Go through the utility sector and look at the strength within. Because if I slapped a software name over top of this, I said this was Snowflake, or I said this was some crazy software name, you guys would be all over it. But sometimes it's these boring businesses that are being fueled by the spend of the businesses that are sexy that do really, really well. And we're seeing that here. All right, CMS. Good looking chart. Good looking base breakout. Little cup and handle type pattern forming here. So DTE, right? Another base building here, right? Duke Energy, another base building here, right? You'll see it over and over again. You see some reversals in here too in these types of names. PPL, right? Trying to get back to these former highs. So that's what I wanted to highlight with you guys this week. Kind of wanted to walk through these utility companies, an area of the market that might not be getting a lot of love from folks, but I think it's an area you should be focused on. I think it's an area that can have some outperformance. Look at Vistra Energy Corp. Look at this weekly chart. Beautiful. Right above that 200. Earnings coming up this week, so pay attention to that. But you just have breakout on breakout on breakout in this space, right? So the way you can play it, right? If you don't like individual names, you have like we talked about, you have that sector ETF. That looks great, right? Especially with earnings coming up. Sometimes you might just want to allocate to an ETF instead of taking that single stock risk of earnings. But look, you have that beautiful base here that's breaking out, right? Any pullback to this $80 range, $82 range is something that we're taking a look at. You want to be even more diversified in utilities. RSPU. This is utilities equally weighted. RSPU is the ETF, right? Another way to look at breadth, right? It's a breadth proxy for the names within. And what do we see? Right? Base, retest, launch pad, right? Up 1, 2, 3, 6 days in a row here, right? So there's strength within these names. Look at those boring businesses. Draw your levels on the S&P 500. Pay attention to volatility this upcoming week, and maybe allocate to some of these other areas of the market. But guys, that's what I wanted to highlight this week. That's the hidden stocks that are literally fueling the AI boom. And AI cannot exist without those. So if you don't think these companies aren't going to spend to get what they want, they're going to. And whether or not it pays off, who knows? But we can buy the shovels, the utility plays, that can get them there. So tune in, guys. I'll be sending out my Sunday stock list on Sunday. If you're not subscribed, subscribe. Give this video a like. Leave some comments if you have any comments related to anything. I'll try to get back to you guys over the weekend. I see a couple comments in the chat. Shout out to the people in the chat. People are in high beta stocks. I'm trying to read some of these comments right now. Can you use a chart where the ticker name is bigger? Yeah, I can. So I'll send here in the chat Duke EVRG. I'll just send over you guys some of these tickers. So EXL, ETR. So I just sent over some of those names in the chat. Shout out to the people in the chat. XLI or XLU, XLU, as I mentioned. So yeah, give this video a like, give it a thumbs up. Guys, subscribe to my work if you're not already. Sunday stock list will be out Sunday, highlighting some of the trades that I have, and then Tuesday, Thursday, highlighting anything else. Have a great weekend. Enjoy it. Peace.